Frank Holmes, CEO of U.S. Global Investors, is back. We're going to be talking about gold price action, the dollar, Fed, and airline stocks, and the economic recovery. Frank, it's so good to see you. Welcome back.
Happy timing now. We're in September.
That's right. Now, Frank, investors are getting worried that gold is not being able to breach the $2,000 level mark again. We're seeing strong resistance. What's going on with the recent price action, you think?
Digestion, it's going through the $2,000 level. The euphoria of Warren Buffett all of a sudden buying a gold stock, just as a normal process. And going straight up is only going to lead to a powerful crash. So I love this sort of stair-stepping. It's a perfect market.
Okay. So you're not at all concerned about this volatility continuing. In fact, you think that you've told me before that you might want to be buying on the dips. Is that correct?
Yeah, that's right. And if you're not long, you'll be wrong. On every one of these big pullbacks and even shorter ones is understand the daily volatility of bullion. It's plus or minus 1% on a daily basis. If it falls 2% or more, 3% a day, that's when you want to be buying. If it surges 3% a day, that's the time you want to take some profits for those traders. And you can see this elasticity that it doesn't happen often that goes 3%, 2%. And that's what we're dealing with. Now, over 60 trading days, it was just normal after going up 2 standard deviations that we would get a correction of 10%. So I just feel it's actually going nicely sideways for me. Building, the companies are going to do phenomenally well. We're seeing this last quarter, the end of June. The numbers are excellent. High free cash flow, something that the Buffetts love, which we've talked about in this program for the past 6 months, to get ready for more free cash flow showing up in this industry. And I think come the end of this quarter, it'll even be more breathtaking when you compare to the overall S&P 500.
I think one of the things that spooked the gold market last week was when the Fed, during the Jackson Hole Symposium, announced that they would do whatever it takes to, well, I guess, prop up the economy, but also control inflation, suggesting that if inflation does come back, they would take measures to control it. That's a bit of a less dovish stance than what we're used to be hearing from Jerome Powell, and then gold kind of traded sideways after that. How would you be digesting his message?
That's just sentiment. Sentiment has a gamma. That news is good for 24 to 36 hours, and then it's gone. It's just sentiment, up and down volatility created by headlines. What's really important is the unprecedented growth in printed money all over the world. And now we're seeing it's $1.3 trillion of additional debate with Congress and Trump, what they're going to put into the economy. They're going to continue to print, and that's the reality we live in. So what Powell says, I'd rather take a look at the old algorithm, the old model for determining what CPI is. When gold hit $850 and silver $50 an ounce in 1980, that algorithm that defined what inflation was has morphed many times. And if we use that inflationary number to that model today, inflation is at 8%. What is he going to do to slow down inflation? Housing is up 10%. I can go on with a whole list of things that are much greater than this 1% inflation they're talking about. Why worry? Get long gold on corrections.
Now, Frank, I know you also like the equities, and the equities markets, as you know, has been, they have been improving steadily, slowly but steadily, keep rising up. The S&P 500 has breached all-time highs already. You see more upside, don't you?
I do. When you have zero interest rates, if you look at the CPI at 1%, allegedly 1%, it's a negative 10-year yield. 5 years, even a greater negative return on your money. And a 2-year, it's terrible. You're going to lose 85% of that income it's just a negative rate of return. So when you look at stocks, like Newmont's and the Barracks, and I can go on. Now Grand Columbia is starting to pay a dividend, and other gold stocks, and Wheaton Precious. These dividends are higher than what you're getting on a 10-year government bond. So you want to be long those companies that have that capacity to pay dividends in a rising scenario.
So Frank, you did tell me before that you're expecting the balance sheet of the Federal Reserve to rise to potentially $10 trillion. Do you think that could still happen after Jerome Powell's message at the Jackson Hole Symposium?
Sure. He's got to show that he's a bit of a hawk going into that symposium because the dollar was on a slide. That was just his protocol. It's just sentiment news. Ignore that. Just really take a look at how much money is being printed by the EU and Japan and here and in China. It's just breathtaking. And I just think the concept of just using monetary policy to stimulate economic growth means each cycle requires trillions of dollars more.
I spoke to an investor, and he's just frustrated that the Federal Reserve is just continuously printing money. He's calling it borderline criminal. He's saying this is just blatant market manipulation, and he's just really angry. I mean, granted, he is long in the market, so he's making money on the equities, but he just doesn't like and support what the Federal Reserve is doing. Would you echo any of these sentiments?
I think it's much bigger than what he's saying. I think that what you're dealing with is a war, and the war is invisible. It's the COVID. It's the coronavirus, COVID-19. And you're seeing around the world this battle of fighting this, keeping people employed, keeping stability. So the cartel of the G20 finance ministers is very active and robust. And so it's like synchronized spending of money, synchronized printing of money to keep the global economy going. And therefore, hard assets, like saying real estate is booming, in addition to art is booming. Any dividend-paying stocks that have the capacity to increase their dividends, they're attracting bids. That's where money's going in a negative and zero interest rate environment. And I don't see that going away for a good time.
Okay. All right, let's move on to the economy now. We're here to talk about the potential recovery in our economy. You were just talking about COVID. Do you see any improvement at all in not just sentiment, but economic activity since the last time we talked?
Yes, I see that there's the housing boom. And then take a look at Lowe's. Lowe's is now in an IBD 50, like we're seeing Kirkland Lake and Franco, Nevada were showing up as growth stocks in the 50 biggest growth stocks by Investors Business Daily. You want to take a look at Home Depots of the world. There's a boom going on. Lumber prices are up, copper prices. I write about Purchasing Manufacturers Index. It's up strong. It's above 50 and it's risen again in China. China consumes 53% of all the world's commodities and is highly correlated to the PMI. Now we're seeing iron ore prices up. I think you're right. This is a great time to buy on the dips.
Frank, thank you so much for coming on the show today. It's always a pleasure to speak to you. Thanks again.
Thank you. Happy investing.
Thank you very much for watching Kitco News. I'm David Lin. Stay tuned for more.